Thank you for joining me. I'm Alex, and I have another Dividend Aristocrat stock for you today, which is Kimberly-Clark. So what they do is also consumer goods, which means toilet paper, feminine hygiene products, diapers, some other stuff. So I think they do Huggies, Kotex, Angel Soft, some other stuff, obviously. So that's kind of the same sector I've been going over this week, and they're also a Dividend Aristocrat, as I've said. So current price is $136.74, which gives the market cap of $47 billion. Dividend yield is currently over 3% with a 70% payout ratio, and that's kind of where the good news stops. So revenue $18.5 billion, which is up slightly, and it's kind of in line with the past 4 years. So there's no significant growth there at all. Earnings $1.4 billion, which is down 30% from the previous year, but also more or less in line with the past 4 years. It's been up and down some, but there's no growth there at all either. Current PE is 23. Total assets $14.5 billion, total liability is $14.6 billion, which gives them a total stockholders' equity of $287 million, which is down from almost $630 million. And the total stockholders' equity has kind of been going up and down over the past 4 years. So not a consistent downturn, definitely not a consistent upturn either. To sum that all up, obviously growth investors are just out because there's no growth over the past 4 years. For a dividend investor, I would be really worried about this balance sheet, even though it's been negative 2 years, positive 1 year, then negative again. So they're kind of just scratching the zero there in total stockholders' equity, which is not a great thing. So I would think that for a dividend investor, there's better stocks out there. And for a value investor, the PE is slightly high, there's no growth, and the balance sheet does not look great. So I think you're out too. So to sum that all up, surprisingly, we have yet another stock that I really wouldn't recommend to anyone, mostly because of the balance sheet. Everything else in a vacuum looks pretty decent. $1.4 billion in earnings, certainly not bad. 3% dividend, not bad. Payout ratio, slightly high, but not bad. PE 23, but not bad. So the balance sheet really is the only thing that would keep me from buying the stock, but I wouldn't buy it as a dividend investor. I wouldn't buy it as a value investor. So obviously growth investors out long ago. So that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.